When it comes to fundamentals, that's a very broad term, just like technicals is. What works for you specifically, or what are the key things you want to read in fundamental analysis that is something you can apply to therefore decide if I'm going to execute on a trade or not? For someone like myself who is not using fundamentals at all, where could I start to look that could probably be of benefit to my decision making?
So I have like 3 layers, as I would say. The first is the most important one. It's interest rates and inflation.
Okay.
Everything that moves, that is the most important to economy. And the second layer is unemployment and employment stats, all the kind of stuff, because it reflects the health of the economy in a whole.
Mm-hmm.
And the third is just the standard economic data like GDPs. So, and the combination of those 3, but in the tier like A tier,
Hierarchy, yes.
S tier, and so is pretty important. And I go like from top to bottom of importance, and try to find connections and what's already in the market, what could be a surprise to the market if something is happening, and then I just listen to squawks, listen to some real good economists and what they think about the current health of the economy, and that's how I build my bias in the end.
And you primarily focusing this fundamental analysis with these layers that you mentioned on USD only, or are you looking at all major economies?
Still, since I'm trading only gold with the prop firms in the last 3 years, it's just the US economy.
Okay. So with prop firms, you're only gold, and then in your personal, it was multiple asset classes.
It was 25 pairs, yeah.
Wow. And right now, what is where most of your attention is at for prop firms, or is your personal capital, or is equal in terms of attention?
No, I stopped trading personals when I started with prop firms, because I want to just
maximize,
put the risk in one basket and not in both. Because I'm investing my money outside of prop firms in other things. Yeah.
Okay, so I've started to understand and unfold the layers of your fundamental side. Talk to me about the technical side, because that's where my attention is at. So maybe I can relate, or we can have a bit more of a debate. Let's see how it goes. But what is your confluence hierarchy for technical analysis, or let's say the top 3 things you look for directional bias, and then for actually an execution? How do you do that?
I keep it pretty simple. I have on every chart, I have the 15 moving average, the 100 moving average, and the 200 moving average.
Okay.
These are my everyday use. And I execute trades only on the 1 hour time frame up to 4 hour. This is
not below the 1 hour time frame.
No, nothing below.
Wow. Okay.
Because I'm intraday. I'm not the scalping guy.
Yeah.
And after that, I use just simple trend lines, simple resistance and support zones, and that's it. And I want to see how the price reacts to those things. To those zones, I would say. And if I see a certain reaction, like denial of zone, I just enter the trade. And my stops and targets are pretty easy to set as well. The stops are on the next support zone, and the targets, I have multiple targets, but I want to see a certain reaction on target 1, target 2, target 3.
And therefore your stop loss is basically around a 1 hour candle or a 1 hour zone. Is that how you're determining your stop loss?
No, on the next structure, let's say, on the 1 hour. If the structure is way above, then I have to risk differently.
Okay, so you will have at times quite a large stop.
Yeah.
And what is your thoughts on the idea that every daily break of structure starts off with a H4 break of structure, H1, M15, M5, M1. Like every move starts off on the M1. And I know you can therefore enter like a chaos zone where there's a lot of movement going on. But for me, I find so much detail in that area. And for me, it becomes quite very different that you're not even wanting to look below the 1 hour time frame. And I found that to go to the low time frame, there's only 2 real reasons we should do that. That could be number 1, because we don't have enough confirmations. We have doubt. So therefore, if we jump down to a lower time frame, we can reveal more information on a lower time frame to see if there's a reaction, rejection, what is going on for detail. Another reason is for precision. That's the 2 reasons. One is for confirmation if there's a doubt. Another one is precision. and therefore I'm really sworn to the lower time frames. And even if I can hold a trade for a couple of days, similar to yourself, intraday, I'll always start on the M5, M1. I'll look at the daily, I'll look at the Asia session, look at the range of Asia. That's my first liquidity pool to frame the day. Then London session, what is that volatility doing? Is it tapping into a zone that is interesting? Liquidity runs and so forth. Is that kind of stuff, or let's say ICT, which is where I'm sure everyone has at this point, spent some time looking at, that kind of stuff doesn't interest you?
No, not really. I've had a look into anything the past 10, 15 years. So
because it's been working for you and you didn't want to.
It's working. Then for the lower time frames, it's just too much noise for me, because I'm not that dependent on the exact entry, because I want to trade zones. Mm-hmm. And for that, it doesn't really matter. And especially when I traded 10 years ago, it was so mentally draining when I used like 15 minutes, 5 minutes time frame, mm-hmm. because I have to always look for it, and it's just too much noise in the end for me. Mm-hmm. And nowadays I find that it doesn't really benefit my system in the end.